UK businesses are exposed to fines under the latest legislation regarding environmental liability. We have met with Steve Jenkins of the Chartered Insurance Institute, who outlines the Institute's current focus. Andrew Coburn highlights for us recent strong developments for RMS. Hello and welcome to this week's edition of News Insurances Weekly. European legislation will now lead to firms being financially liable for damage done to the environment. Aon teamed up with Argyll Environmental to help UK firms better level the risk that they face. British property owners must now be aware of the environmental history of their property, as well as the consequences of their current operations. The Chartered Insurance Institute supports financial advisors and insurers to better meet professional requirements. Steve Jenkins, Director of Insurance and Financial Services at the CII, outlines for us what has been set up to better help these.
Well, the highlights at the CII for 2010, I would say, in the UK, our whole focus now is on supporting financial advisors operating within IFA firms and within the major bancassurers to meet the requirements of the FSA's Retail Distribution Review. Initially, that's around supporting them through a new requirement around qualifications, but more broadly speaking, to deliver relevant continuing professional development for them, which again is a very important part of the new requirements of the Retail Distribution Review. So that's the financial advice market. As far as the general insurance market is concerned, an industry-led initiative under the Aldermanbury Declaration defines a framework of professional standards, and we were delighted that we've had the vast majority of insurers and major brokers commit to raising the standards within their organisations for their relevant staff. For 2011, we want to continue those initiatives to support organisations through that journey, but it's notable from my perspective that the whole subject of professional standards is not something that's unique to the UK. We've recently been asked by the regulator in India to help support a similar initiative there in the financial advice market, which is an enormous market serving the needs now of the emerging middle class in India. You have something in the region of 1.5 million agents, and the knowledge and expertise those agents have is critically important, and we've been asked by the regulator there to support that initiative, and that's probably going to be a key element of our work in 2011.
In January, Risk Management Solutions has successfully modeled its first longevity bond. Andrew Coburn, Senior Vice President at RMS, comes back for us on this success.
So I think for us on our team, the highlight of the past 6 months to a year has been the modelling work that we were involved in on Cortis, which was the world's first successful longevity bond. Swiss Re wanted to securitize the risk from longevity risk in their big annuity books and offered a bond to the capital markets. So this is the first time that the capital markets have become deeply involved in securitizing longevity risk, and RMS had to use a quite detailed model of medical advances and the whole kind of main drivers of the increase in life expectancy to help characterize the risk for Swiss Re in transferring that risk to the capital markets.
That is all for this week. Thank you very much for your attention, and I will see you for next week's edition. Goodbye.